I know you've been obviously tracking not just how the broad market's doing, but all the damage that seems to be piling up below the surface, just the breakdown in really the typical stock, the majority of stocks down much more than the indexes. Does that tell you mostly that this market overall has lost momentum and might be in defensive mode, or perhaps that we have the makings of a rebound coming?
Maybe probably first the former and subsequently the latter. And, yeah, you've seen a breakdown in breadth statistics, whether it's, new highs, new lows, moving average type breadth numbers that have deteriorated pretty noticeably. But you're seeing a wide spread in terms of some of the healthier, from a breadth standpoint, sectors versus the ones that have been more damage, but quite frankly, the churn under the surface has been pretty dramatic all year. It's had different flavors to it. Sometimes it's been at the sector level. Sometimes it's been in terms of rotation. Sometimes it's been at the stay at home versus reopening, cyclical versus defensive. Today happens to be a day where your classic defensives are doing relatively better, like consumer staples and utilities, and it's the more cyclical, financials, materials, industrials that are taking it on the chin. But the good news is we're starting to see an improvement in sentiment conditions, which were pretty frothy before this volatility started with the Omicron news, and hasn't quite set up yet for a sentiment-driven pop, but we may get there sooner rather than later.
And I know that you've been emphasizing or wanting to emphasize things like quality as a selection factor for stocks, just profitability metrics and things like that. Where does that take you in terms of, I guess, the types of names, whether it's big cap over small or other factors that you think make sense to rebalance into as we come to year end?
So the factors that we've been suggesting you focus on do have kind of a quality wrapper to them. So it would be rising earnings revisions. That's particularly important when you start to get into an environment where there's a dearth of persistently rising earnings revisions and other typical quality factors like strong balance sheets and strong free cash flow yield. I think also pricing power is important in this kind of environment. And I would say apply that type of analysis if you're a stock picker and not you don't take a passive approach. Apply it up and down the cap spectrum. Apply it across the series of sectors. I think a factor approach doesn't, in turn, suggest you have to be myopic in terms of where you look for those factors. But I think the low-quality kind of trade, so to speak, that dominated the early part of this year, I think that's mostly in the rearview mirror.
Are you basing these calls, Lizanne, on the view that the Fed is going to be able to tighten 3 times next year in terms of interest rate hikes and move up the taper as they've announced that they're going to do? Because it seems like that might look aggressive to some people on the brink of this Omicron variant, which is spreading so quickly, and the fiscal withdrawal of stimulus.
So a focus on quality has more to do with where we are in the cycle and just the simple notion that we're going from very loose monetary conditions to tighter monetary conditions. It's not predicated on whether the market is right in that we might have 3 rate hikes. We don't know yet. I think there's this, from the questions I get, I feel like there's this perspective that the Fed knows what it's going to do and just hasn't sort of shared it with the public yet. But take them at their word regarding data dependency. I don't think they have a definitive idea yet of when they're going to start, other than, as of now, still saying it will be post the end of tapering, but that could be kind of in conjunction with the end of tapering. It could be May or June. We don't know yet, but just the simple transition into tighter monetary policy and the fact that there are myriad other conditions that suggest we may be later in the cycle than the calendar would suggest just tells me that you want to have that quality wrapper around where you look for opportunities.